Why us, Jim? Why us?
That's a great question, Wanda. So investors have the opportunity, if they've been investing a while, to invest with a lot of different sponsors, a lot of different funds, a lot of different deals. And so they should be asking themselves that question. That should be one of the three most important questions: is why us, why this deal, and why this market? And to answer the first one, which is why us, we spend thousands of hours, look at thousands of deals. We look at hundreds of different local markets and local sponsors and local boots on the grounds. And we vet all of those deals. We invest in a lot of them and don't necessarily put all of them on the platform. But the very best ones we bring to our investors because we have a fiduciary responsibility to you. And if if you don't have the time to be a full-time investor, if you don't want to have to look at that many deals, if you can't afford to go to Texas every month and vet deals and walk properties, and if you don't have the time to attend all of the conferences and speak with all these different sponsors and then have multiple follow-up meetings with them and go meet them in person at their home bases, that's what we do for you as investors in the GOB fund. And we have a fiduciary responsibility to make sure that these sponsors that we choose for you are bringing you deals that we love and that we want to invest in, and that we want to give you the opportunity to invest alongside of us. And this is another one of those deals. But in short, we want to answer that question: why us? Why this deal? And why this market on every slide that we spend time talking about. And we may not bring that out each time, but that's what should be in the back of your mind. And you should be asking that question with every slide that we talk about.
Thank you, Jim. And if I may also just remind anyone, if you want to scan this right now and do a quick self-commit and reserve your spot. Self-commitment doesn't mean that you are actually committing to fully invest, but you're locking down your spot, and you can then review the pitch deck, review everything else, and join in if you want to. And if you change your mind, you can actually back out. But again, once you see this, I doubt you will back out of this grab opportunity.
Yeah, Wanda, what did we talk about all last week? The previous couple of deals that we did with this particular sponsor, they filled up really, really fast. So you're reserving your spot. We're not asking you to send in your check the same day, but you're reserving your spot so that if you think you like this deal, you're not going to wind up like so many other investors who said, "Man, I really wanted to invest in that deal," but they didn't reserve their spot. And so that's what Greg is making reference to. And I know you brought it up over and over and over again this week, Wanda.
Yes, and exactly. Remember, this deal is cash flowing on day one, without renovations, without anything being done to the property. Day one, cash flowing deals. So that's pretty good in this current lending environment. Hello, everyone. Thank you for joining us in our webinar presentation of our newest investment opportunity. Greg, you want to hit the slide? This new opportunity is called the Stoneleigh Apartments. This is a 200-unit opportunity in Dallas, Texas. This is in the Mesquite submarket. It's a really good area in Dallas, just east of Dallas, and we're really excited about this opportunity. It's a rare opportunity because it's a 1997 vintage deal, and we're getting it at a very low basis of $135,000 a unit, which is 20 to 30% discounted from what we would have sold for last year. So the story on this one is the seller is a true mom and pop family. They've owned the deal since 2008. They've owned it for 15 years, and they have not had any professional management on the property. They just hired some people who've been working on the apartments the entire time. It's 100% of these units are in classic condition, so we can renovate all the units in the property. And the property currently is being held in the mother's estate of the family, and the mother just recently passed away, and so the kids are selling the property. They need to sell the deal by the end of this calendar year of 2023 for estate tax purposes. And so the same broker we just bought our last two deals from in Dallas, he bought us this deal. He said, "Hey, this seller needs to close quickly, and they need somebody who can execute and is easy to work with." So they chose us. So we're getting a real good basis on the deal at a significant discount. And we've made, dozens of offers in the last years in Phoenix and Dallas markets on the same type of product year properties of 1990, but we always get bid out by bigger institutions, so we can never make the deals work. And so we're really excited that we're able to make this 1997 vintage deal pencil in, and it has significant value add. So it's a turnkey property. We're going to put washers and dryers in there. All the units have hookups, and so that's an easy $50 of rental income increase per unit. And so, yeah. And this is the disclaimer. It's a 506B property offering. It's not available to the public or all the investors have to have an existing relationship with one of the sponsors, so you won't find the fund, you won't find this type of deal on any public platforms, websites, or social media.
Very excited to present this deal to you. This is, here's the agenda right here. So we're going to go over the sponsorship team, the executive summary, investment highlights, the apartment complex itself, analysis, the Dallas DFW MSA area, and the rent acquisitions. And again, the main thing is, why are we actually interested in this deal? What do we like about it? Why should you look to invest with us? Why should you look to invest in this market? And why should this deal here be the deal to invest in? The sponsor team, as you can see, Mr. Jim Biggs, he is our manager and advisor. Jim is the founder of GOB Network of Apartment Investors, key principal to, he's a great leader in helping us to actually make sure that we have everything down and everything's penciling right. Wanda Norris, she's an owner-operator and asset manager for multifamily apartments as well, licensed realtor in Florida. She has 480 doors under her, and great team manager, great partner as well. And myself, Greg Dion, as you can see, Air Force retired, licensed agent in Florida as well, and I have 450 doors under management.
To add that during this webinar, we look to answer 3 questions for you as an investor, and that is, why should you invest with the GOB Network family of funds? Why should you invest in this deal? And why should you invest in this market? And we're going to try to hit those 3 whys over and over and over again so that you're comfortable investing in this deal and investing with us. And first, I want to say thank you so much for being on this webinar and taking time out of your busy day to look at this opportunity. And to all of our investors that have invested with us prior, we're very, very happy to bring you another opportunity. If you're new and haven't invested with us before, then this will be a very detailed webinar, but we're going to kind of really hit the highlights and try to emphasize, why should you invest with the GOB Network family of funds? Why should you invest in this deal? And why should you invest in this market? Now, you can take time. We don't want to spend 3 hours, although we easily could. And trust me, we spent a lot more than that looking at the local boots on the ground sponsors and looking at this deal and many, many others, trying to bring you the very best deals to invest in. And so we're going to highlight a few slides, but definitely encourage you to come back and review this entire slide deck, and that should be able to answer all of your questions. But we will offer the opportunity at the end for you to have an avenue to ask additional questions that you couldn't find answered here. So thank you for that, Greg. Wanda.
Thank you, Jen.
Thanks.
All right. So going over the Dallas infrastructure, we have a solid infrastructure in Dallas, and as you can see, our office is actually in downtown Dallas, so we have boots on the ground with over 40 full-time members in the area, making sure that we have 24-hour access and vintage to what everything is happening in with our properties in Dallas, as well as properties that we have also in Arizona. So
we'll have a very informal type of webinar tonight, in that we want to continue to answer those 3 questions for you guys, but we're going to treat this almost like you're here with us sitting around the kitchen table and we're discussing a deal and why we think this is a good deal, and we want to continue to hit on that. So the number one thing that we're looking at is, why should you be investing in this deal, and why with the GOB Network Fund? And the reason for that is that as full-time investors, and all 3 of us are full-time investors, we look at hundreds, if not thousands, of deals a year. And in particular, the Texas Triangle and the Dallas-Fort Worth greater MSA, we are down there a lot. We go down there at minimum once a quarter. Sometimes we're down there every month, and we have a lot of assets down there. We don't bring every asset to the GOB Network Fund investors. We only bring the very best ones. There's a lot of deals that we're investing in these markets that don't measure up to what we think. They may have a little bit higher risk or a little bit newer sponsor. And so we only pick the very best ones to offer to you guys in the fund. And so if you're not familiar with the term, the Texas Triangle, that talks about, why should you invest in this market? And the Texas Triangle is a very large portion of Texas that encompasses Dallas, San Antonio, and Houston. And along that route is also Austin. So those are the 4 major cities, and they make up a big triangle in Texas. And economists have said that Texas Triangle will be the first megacity on Earth, that it will be one giant MSA. And the power and economic engine of the Texas Triangle is projected to lead the economy for not only Texas, but the United States, and the first megacity in the world. So great place to be investing.
Thank you, Jim. So here we have our consistent supply chain. So what's so special about this deal here is that, like all our other deals that we've invested in Texas and Phoenix, they have the consistent supply chain. So vertically
integrated.
Yes, vertically integrated. Yep. And so we I'm sorry, can you take I'm sorry.
So what does that mean for you as an investor? So, we every time that we looked at this deal over the last several weeks, Wanda kept coming back to, this is really important. We see so many sponsors that they put a pro forma out there and say, we're going to renovate this many units per month, and we're going to put up this level of trim. And come to find out, they can't get the right contractors. They can't get the right property manager. They've changed property management 3 times. The supply chain is slowing down, and now they don't have the parts they need to be able to deliver on the timeline that they promised in the pro forma. And it is a constant problem in the industry. And this is what, guys, is this the 3rd deal that we've done with this local boots on the ground sponsor?
Exactly, it is.
So yeah, so I've known these guys since 2018. I love working with them, and we as a GOB fund love working with them. They have some very unique properties that no one else has. And when I say properties, I mean they have uniqueness about the way they operate. And one of those is being vertically integrated. So they already have a huge warehouse of all the parts that make up the platinum finish that we've used on every one of the assets. So we're not trying to reinvent the wheel. We've already got a plan that works in regard to what the upgrades look like. And it's market tested and proven. This is what people want in today's market. And so we, in bulk, stock all of those items. And we, in Phoenix now, we have over 200 people with this local boots on the ground sponsor, over 200 people employed within the organization. And we've been investing in the DFW market for probably 5 to 7 years now. And even though this sponsor used to be local in Phoenix, they've relocated and opened an additional headquarters in Dallas, and in short order have bought 3 more assets and have hired 40 more people, and reinventing the same structure of 200 employees that's in Phoenix here in Dallas. And so we don't want to invest in markets where we don't have someone that lives in the market. We want someone, when things go wrong, when the proverbial shit hits the fan, if I can say that, you have someone in the middle of the night that can pick up the phone and the next morning be at the asset on the ground and fix the problem and handle whatever situations come up. So being vertically integrated, and there's a lot of reasons why we love this sponsor and this boots on the ground. Being vertically integrated is one of those. Not having to constantly change property management because it's vertically integrated within the team is another. And also the fact that these guys, we've done so many deals with them, and they have some things that you don't find very often, like monthly distributions. And it's really important. One of the things that Wanda always says, does this cash flow day one? She's always wanted to know, does it cash flow day one? So Wanda, that was one of the things you kept mentioning about this deal. This is a cash flow deal. This sponsor is a cash flow sponsor. They have monthly distributions instead of quarterly distributions. And the last couple of deals, Greg, when did we start paying out? Was it after
the last couple of deals? Yeah,
within
the first 2 months, actually, the last couple of deals with them.
Yeah.
On time.
Fantastic.
Yes. Thank you, Jim. All right, everybody, here's the Dallas statistics. If you have a chance to, make sure you look at that and to see how and why you should be investing in the Dallas market. And then this is how we actually are vertically integrated in the Dallas market as a sponsor team. And again, we have our full team in Phoenix, and we also have the full-time staff in Dallas to be able to actually make sure that we have full attention to this deal. And that's one of the reasons why it's very important to have a sponsor team that actually has full boots in the ground to be able to answer the 2 o'clock calls and make sure everything's taken care of and make sure that your investment is protected.
Mm-hmm. And what I love about this, the same ownership. So our sponsors control both the asset management and the property management. And what that does for you as the investor is more cash flow because we're able to control the expenses and the income on the property.
So this is our track record. As you can see, we had 11 full rounds, and again, zero capital call, very important, zero capital call, and that's why we love working with this type of operators because we do our best to make sure that we don't put you in a position where we have to request any more money from you other than what you invested with us. And very important as well, monthly distribution. You start getting your monthly distributions very shortly after we close on this deal, and start collecting and increasing your income for that. And we do have a very clear monthly reporting, transparent, and you have access to it every month and be able to also reach us at any time if you have any questions about it. And this is one of the things that we are going to make sure that you have available when you invest with us with the GOB Network Fund II.
Yeah, I also want to say real quickly, this slide, like a lot of the others, will reinforce a lot of the things that are being said. No capital call is super important. If you don't know what that means, it's when a sponsorship team runs out of money, or the cost that was in the pro forma winds up being much, much higher. And so now they need to call the investors back and say, hey, we need more money. We don't have enough. We didn't, our things have changed. And so that's never happened with this sponsorship team. It's never happened with us or with the GOB Network family of funds. And that's something we're very proud of. A lot of deals that I invest in as a passive investor, I'm going to tell you that 70% of the deals I'm invested in had capital calls last year. And so this is a very, very important piece to look at. We don't want to spend a whole lot of time on it, but another thing that I want to bring out is that this is a B-class asset in a B-class area. It's a very, very, very nice asset. It's a newer asset, and you could literally come in from day one and just start raising rents because the rents are so low to market. But all of these pictures are actual pictures of the asset. So pay attention to that while we're going through the slides, because we're not going to spend a lot of time on every single slide. You can go back and review those, but I did want you to know that these are actual pictures of the asset.
All right, so here's get a chance to see our portfolio right here, right? Both in Dallas and in Phoenix, and how we performed. All right, and again, you can see the portfolio and the loan to value, and the importance of loan to value is actually it helps us to reduce the risk. All right, loan to value is at average 68%. For this deal here is about 60% loan to value, which means that we've drastically reduce the possibility of something happening to where the bank have to call anything else, or we're not able to actually meet the criteria, not able to protect your hard-earned investment money with us.
That is a very key metric that investors should be looking at. Don't you guys agree? That, over the last 5, 10, 15 years, everyone's trying to get maximum leverage. Everyone's trying to get 80% leverage. And so they're looking at markets where they can get 80% leverage because the numbers work better. And when you start presenting to investors, the higher the leverage, the better all the numbers look. IRR looks better, equity multiple looks better. But the downside to that is there's a lot of deals that this year are being offered at distressed sales. And honestly, this is one of those. This is a little bit of a distressed sale where we're able to buy this at the same price we were buying C-class assets per door in DFW over the last several years. And this drastically lowers the risk to the investor by having a much lower loan to value. So when you're looking at a deal, the lower that loan to value is, think of that as extra protection for you as an investor.
And here we have our track record. So if you take a look at the projections in the light blue, we have 1.9 in equity multiple. That was the projection, and the actual was over 2 in 17 months.
Again, as mentioned earlier, transparent reporting is we demand from any company that we're working with where we are actually bringing investors' funds in, that they would provide a monthly reporting. We make sure that you have access to every information that we can actually be able to provide for you, so you can actually verify that what we're saying is happening. Not only are we there at least on a quarterly basis to make sure that turnarounds are being done properly, being done on time, being done on budget, but we also want to make sure that you as an investor have access so you can look at that information yourself, do your own underwriting, QA what we're telling you, and ask us any questions if you have any concerns about anything that you see.
Right. And we take a lot of pride in our reporting because our packages include, you get the income statements, the mortgage statements, the balance sheets. You get to see all the construction process, the operational results. So it's a very comprehensive transparent reporting that we have.
And don't forget the monthly bank statement as well is going to be provided for you as well. So it's about 100 pages. It's a lot of fun reading, but it is available for you to make sure that for those who are very analytical, you can dig into it and then see how the numbers are actually going. summary right here. So here's a quick overview of this deal and why this deal right here. So this opportunity right here, the Stoneleigh at Mesquite, again, a B-class property and B-class location. This asset is a 200-unit multifamily asset, 1997 built. Great location, great area, great city. That's why you want to invest in this right here. As we mentioned earlier, this is a mom and pops. It's been in the family for 15 years. Unfortunately, the matriarch of the family, whose name this was under, recently passed away, and the kids are not interested in continuing to run it, which happens sometimes. And they are looking to sell it by the end of this year for tax purposes. But that's why we're getting this at a 20-30% discount. And this discount right here is going to be a benefit for you as an investor when you actually come into this deal, be able to take full advantage of this right here. The Stoneleigh is a well-balanced property with well-balanced mix. We're going to have 40% one bedrooms, 40% two bedrooms, and 12% three bedrooms. And the importance of that is a lot of times deals that we run across only have one set, say 100% one bedroom, or they may even have a few two bedrooms. But when you have a well-balanced mix, you are more likely to have people who are staying there for longer, and they're more likely to want to pay a better price because it is a well-mixed property, and that in turns goes to the profit and that in turns makes it possible so that we can actually have a successful execution of the business plan.
So here we have the interior renovations. So the current units are classic units and they don't look too bad as is, but we're going to make them look better for the area because basically in this market, I believe the medium house is running at $479,000. And so the fact is a lot of people can't afford to buy new homes, but they still want to live in luxury, nice places. So here on the right-hand side, you'll see how the units are going to be upgraded. New light fixtures, new sinks, brand new cabinets. So quartz counter, basically our platinum package on every single unit. Also adding the washer and dryer that'll give another $50 a month for the washer and dryer upgrades. Here's the offer summary. So we're purchasing this for 27 mil and equity raise 16. We're holding it for 2 to 5 years and the minimum investment is $50K. For new investors and existing is 25. Next slide. Jim, what do you think about this? Area highlights.
Yeah, as you guys know, I absolutely love the Texas Triangle, and DFW, the Metroplex, is my favorite city in Texas. I think that DFW is the epicenter of apartment investing. It's where everyone wants to be. In the future, I feel quite confident it will be the economic hub of Texas and probably will be the leading city in the United States. This is a great opportunity to buy an asset that is already in great shape, but it has 100% classic units. That's what's important to me, is that even though they're in great shape, none of them have been renovated and brought up to the latest, greatest interior decorating, if you will, that all of the renters want in the marketplace. And it's very unusual to be able to get an asset like that, especially in Dallas, where everything sells every 3 years. This asset has not sold for 15 years. And so although they've taken great care of the asset, it's classic. Everyone is classic. And we're able to come in. That makes for an opportunity to have a much higher likelihood.
Why this market right here in Dallas, as you know, as we've been saying again, why this market right here in Dallas, as you know, as we've been saying again, the Dallas Triangle, a lot of growth, a lot of top companies, high earning, high paying jobs, strong job growth, and that's why we love about Dallas, because it is continuously moving forward and executing pretty well. So quick area highlight right here.
Investment offering. This is a Class C. The minimum investment again is 50 for the new investors and 25 for existing investors with a 7 preferred cash on return. And it's a 75-25 investor sponsor split after the preferred cash. Next slide.
And this is a 2.0 equity multiple, which means that it doubles. We're doubling your investment. So if you invest $100,000, by the end of that, you're gonna get your $100,000 back plus an additional $100,000 combined in both the cash on cash receiving and the distribution after we've refinanced or sold the property. So we're looking forward to that, and it's a 16% internal rate of return that's actually gonna be earning on this property right here. Right. And again, here's the projection numbers right here. Very, very important to take a look at it when you have a chance to look at this slide deck.
So, Greg, if I could take this one, a lot of these numbers confuse everyone. It gets really cloudy, and it's like, oh boy, I'm not good with math. All these graphs and charts make me nervous. The thing that I want to point out is we're not going to spend a lot of time getting bogged down in that. This asset has great returns. It has great metrics. But if you look at all of these slides, when you have time to do it silently, alone, by yourself, and take as much time as you need in each slide. But if you look at this, the blue is our projections, and the orange or peach color is RealPage, our financial analysts, one of the biggest in the country, their projections. And one of the things you'll see over and over and over about this deal is that it cash flows day one, and that we're very, very conservative in our underwriting and in the way we finance the deal. And more importantly, all of our rent projections and rent growth are less than what the financial analysts are telling us it should get. And when you start looking at our comps, and we have looked at all of these comps, we have walked all of these comps, and we know this market very well. We've invested in a lot of deals in the greater DFW area. We're in the bottom or the bottom third of our projections on all of these numbers. And so that's, again, very conservative for you guys. We don't want to get you bogged down in the numbers, but they're all here. All of these slides, are 75 slides in here for you to look at. So there's every number you want to dwell on, you have the opportunity, but we don't want to get bogged down in that. The big number is, this is a 2x equity multiple in that 5-year business plan. We are almost always somewhere between 1.8 and 2. And so far, with this sponsor since 2018, never missed a projection, have exceeded those projections, as you can see throughout the slides. So if we can go to the next slide.
And again, as you can see right here, the rent growth is projected by CoStar, RealPage, and we are actually averaging below that as well. And that is part of the conservative underwriting. It gives us that buffer, that moat, in case if things go left, then we have enough spacing to make sure that we're continuing to provide and protect our investors' funds. And that's why we do that conservative underwriting and make sure that our sponsors that we're working with also take that as principle as well.
Equity multiple chart here. You can take a look at the numbers in more detail.
And
next slide.
Yeah, also a sensitivity analysis. There will be several of those in this pitch deck where you can see the exit cap rate. If the cap rate is 4.55, or if it's 4.7, 4.8, 5.3, or 5.8, that's a sensitivity analysis. A lot of you want to say, well, what if? What if this goes, the market goes this way? What if it goes that way? So we've included several of those in the pitch deck for you guys to look at. So yeah, next slide.
Let's take a look at the investment highlights. Here's our business plan, the exterior facelift, amenity upgrades, interior renovations, and our contingencies, very important. Reserve funds for repairs, roofing, HVAC, all of that makes great for a great business plan.
So what we're going to be doing is, of course, part of the business plan is, again, renovating new signage, new LED light backgrounds, converting from the classic units to the platinum top finish, so that we can actually be able to actually have that increase. So all 200 units, 100% of them are going to be moving up from the classic to the platinum finish, which is going to give us an additional increase in rent. And we are also adding washer dryers in 100% of units, which is going to be an additional $50 per unit increase. And that is actually a great opportunity to return. Very important as well as what we look for as in our sponsors is reserves, making sure we have enough reserve, enough protection, enough moat in case if things go left. And so we have as part of reserve for things like AC, high expense capital things that might actually happen. We have that. We make sure our sponsors and our partners have that fully ready in case if something happens, especially in the hot Dallas, Texas market.
CapEx budget. So we're doing interior renovations for $17,000 a unit. That's pretty good. And we're able to get these prices because of the in-house construction team that we have and our special pricing that we get. So that's pretty good for that. And also, one thing to note, construction management fee, that is not paid by the investors, by the lender, not by the investors. That's not the case on some deals that I'm looking at out there.
This is a CapEx budget that we, in this business plan, that is a very proven business plan that we've been following for the last 5 years. And we just keep perfecting it each and every time. And so we've got all of this down pat, and we know how to execute it. We know what works, and it's market tested, and it's bulletproof.
Interior renovations. Okay, so this is more of the same. This is more of the same. So before and after is rinse and repeat on our renovations. We've done this a million times.
The debt financing, as mentioned earlier, 62% LTV. we make sure that our leverage is actually in the best possible. It's a 5-year interest only. That gives us enough time, and a 4.75% interest. And we bought down the interest to 4.75% for 3 to 5 years. And so that gives us enough time for that. And as you can see right here, we are verifying the interest rate fluctuation. Should anything happen as part of our sensitivity, testing our sensitivity to the rate changes. And so we're still able to actually at this 4.75% in 5 years, be able to actually give an average of 6% cash flow and 2x return to our investors.
Yeah, so the most important thing here, I think, Greg, and we talked about last night, was that our interest rate cannot rise above 4.75 because we have locked in an interest rate cap. And the reason so many of these deals are coming available now is with the rising interest rates. People did not do that because it cost a lot of money. But it's the smart thing to do for your investors. It insulates the deal from having to be sold in distress because interest rates are rising faster than you can raise rents. The exit strategy here is like the same one that we performed in our business plan multiple times over the last many years, which is we're going to do major value add and renovation. And if we have the opportunity to refinance and pull all of the capital back and give it to the investors, then we will do so if it makes sense to refinance. And if not, then we will look at selling anywhere from that 3 to 5 year time span. But with a newer asset like this, there's a strong possibility if it's continuing to be a cash cow and really giving us great returns in year 5, many of our investors may want to just ride the storm and just keep receiving those returns. And if that's the case, that's what we'll do. But we've got a lot of insulation built in to make sure that we have multiple opportunities.
Also, we are going to be exploring cost segregation, which is a tax benefit for that. So just keep that in mind as well. Stoneleigh Mesquite Apartments.
Here's some property information. So again, we're purchasing at 27 million. There's 10 buildings, 200 units, and the average size, pretty good size on these units, 879 and great vintage, 1997. They all have individual HVACs, and it's a wood frame brick shingle roof building.
And for this right here, the basic thing that you have to realize is, as a case study, what we're looking for is how well our renovation is going to be able to actually give you a return on your investment. So case study right here, based on the 2021 case study, it will be an increase of 3.5 million for this property here. And then we look at our next one, you can see a number for 2022. It'll be, if we use that case study, it'll be an increase of 2.5 million basically on that. And very importantly, as you can see on the bottom from the chart, the bar graphs, and you can see what we actually had expected and how we performed. And every time we've outperformed our expectation because we underwrite very conservatively. And so that allows us the extra room.
Next. 2023 renovation. So look at the chart on the right, what we expect to increase the rents, our performer. So it looks like total renovated units we have renovated in 2023 have been over 1,600 with average rental increase of over 400. So again, we've done this so many times, and so it's like a rinse and repeat.
As again, increased renovation that allows, as you can see right here, because of the vertical integration, because we cut out the middleman for the construction materials for the construction team and the management, it allows us to be able to actually speed up our renovation process and the steps, and that allows us to be able to appreciate the properties, especially in an environment of high interest. Forced appreciation allows us to be able to actually increase the value of the property rather than depending on what's happening in the interest markets to affect how much we can actually increase the value of the property.
I want to emphasize something here that a lot of people ask, hey, that really sounds like a very aggressive renovation schedule on that deal that we looked at. We actually invested in probably a dozen deals last year, and I got that question over and over and over again. And one of the reasons we chose this sponsor is we're not projecting the renovation schedule. The 1,000 units that were renovated in 21, 22, that was, if you guys remember, that was during COVID. That was when everything was shut down. And because we're vertically integrated with this sponsor, we were still able to renovate 1,000 units. So that's not, can we do it? That's already what we have done. And in 23, in the last 9 months, we've already renovated 1,653 units. So this is not what we're projecting we can do. This is what we've already done. So this is proof that we, being vertically integrated and having, in-house construction and management allows us to really add a lot of velocity to that schedule, which means as investors, you're getting increased NOI, increased rent sooner, and cash flow sooner.
As mentioned before, as you can see, very good unit mix, and it's well spread around. Sorry about that. Okay. And what we're looking for is to be able to have an average increase of average of $200 per unit after everything is done. And we're looking forward to being able to do that.
Yep, I'm really loving that unit mix, the yin and the yang. Right, Jim?
Yes, ma'am. It makes for a great tenant base, a mixture of tenants, and you're not just, when you're all one bedrooms, you have a tendency to have one type of renter. And if you can't attract them, then your vacancy is going to shoot up really high. And it's not as interesting. When you have 1 bedroom, 2 bedroom, 3 bedroom, you have a really diverse mix of tenants and where they work and where they live and play. And it makes for a lot more community and a lot more fun place to live.
Agreed. So here's the financial analysis right here. Again, as mentioned, 7% pref, preferred cash on cash, and 75-25 split between the sponsor and our general and limited partners.
Okay. Class C profit share overview. So here, take a look at the preferred returns profit split and then the description there on the right.
So you will see in this presentation, we concentrate a lot on the Class C shares. But it is important to note that this deal has several different classes of shares. If you are a note investor and you really prefer to get a higher monthly income, maybe you're retired, maybe you want to build that monthly income so you can quit your day job, whatever that looks like. If you're a note type investor, we have that available to you. You're getting a higher monthly paycheck, but you're not participating on the back end. But Class C is where most of the investors wind up being. They get a great monthly cash flow and a preferred cash on cash return, and they get to participate on the back end. And then we also, if you've got a much larger amount of money to invest, I think we have a $500,000. If you have $500,000 or more to invest, then there's another class that you can invest in and have, even participate a little bit more. But there are several different classes for you to invest in. So don't be afraid to ask if you don't see something here that you want. We can answer those questions. But this is the class that probably 85% of people will invest in, is the Class C.
Over here, this is the 5-year performance. You get a chance to just go through this, and if you have any questions, please do let us know, and we'll be happy to help to answer your questions. And again, here's the underwriting assumptions that we have here. And our assumptions are here for the different things that we're expecting in terms of the economic occupancies, the rent growth, expense assumptions, and interest rate. And so please have this as part of the pitch deck. And if you have any questions, let us know, because we do underwrite this very conservatively to make sure that we do our best to put you in the best of positions when investing with us.
One of the great things about this deal too is that being self-managed and being owned for 15 years, if you have been an active investor and you've got a small asset or some single family, the thing that always hurts you the most is vacancy and trying to refill that. And it takes a week, it takes a month, it takes 2 months, and that's lost income. And so the bane of most investors is vacancy. And if you hold something long-term the way this investor did, the most important thing for them is don't be empty. And so a lot of times they don't grow their rent as fast as they should. They don't keep up with market trends. And that is the meat of how money is going to be made on this asset. They are already, if we did nothing, the asset's in beautiful condition, and we're at the bottom of the market in regard to where our rents are. And so we're going to be able to push those rents organically, even if we didn't do renovations. But by doing these platinum renovations and our proven business plan, not only are we still in the bottom third of rents and our projections, but we will be offering the newest and the most beautiful asset that potential tenants are going to be looking at.
Okay, and on this slide here, we have tax projections, which is very important. We have partnered up with Control, one of the top tax consultants, property taxes there in Texas. So we're going to be looking at that or looking at the taxes to make sure that we are appealing whenever they're increased. And we're going to be doing that through Control.
Is there insurance projection? As mentioned, our insurance projection every year, we're going to be making sure that we are shopping around and making sure that we're getting the best price for insurance to keep coverage and protection at the right level while reducing the cost to the investment and increasing your return.
Our break-even point is 63% occupancy day one after takeover. So this break-even occupancy, even at 63%, we would still be cash flowing. Is that right, Jim?
Yeah, and what's important to know here, I think the most important thing for me is in this big blue box on the bottom, where our break-even point is 63%, which is extremely low. Most larger properties, they break-even point is usually 80 or higher. So again, extremely conservative, very well insulated against anything that could possibly happen. So investors are protected. A very safe deal. And that with the cash reserves that we have in place, if we were at 63% vacancy, we could go the entire 5 years and cover all of the expenses in the deal. And so again, protection, safety, in making sure that as investors, you're not going to have a capital call. And no matter what happens in this marketplace, where the rents were to continue, if they were to decline sharply, or if something happened, we had a major tornado come through and demolish 4 of our buildings, we're going to be okay because of the conservative nature of the business plan and the underwriting and how much cash reserve we have in place.
Right. So currently the property's at 98% physical occupied.
Right. So Dallas overview again. Why this market? As again, we're going back over it because this is very important. When you get in the right place, look, especially in real estate, it is location, location, location. Okay. So this market, high property population growth. Okay. Personal income growth, rent growth is also going. Job growth is growing. Tech industry is moving in Texas to the Dallas market area, and so the single family home pricing are increasing as well. And so those are different things that's bringing people to the area, bringing high paying jobs to the area, and people who are looking for the quality of units that we're going to be providing and are willing to pay top dollars to be in those units with the quality that we're providing.
Major employers, as you can tell from this chart here, AT&T, Southwest, Fidelity Investment, and I believe it's only 15 minutes from downtown Dallas, this asset.
Correct.
Mm-hmm. Jim?
Yeah, again, this is just a small sampling of employers in the DFW market, a small sampling of some recent economic news. But if you go to DFW as often as I do, go to Texas as often as I do, there's more cranes in the sky. There's more spaghetti highways in the sky in DFW than anywhere you're going to go in the country. And I believe there's only 2 markets in the United States that have more Fortune 100 corporate headquarters than Dallas does. And Dallas continues to add more at a higher pace than the couple that are ahead of it. And even though Houston is the 4th largest city in the United States and is the largest city in Texas, Dallas is, mark my words, going to outpace Houston. And there's a lot of reasons for that. It already has, I believe, more corporate headquarters than Houston does. But a big piece that we didn't talk about, insurance. We're underwriting at $1,000 a unit, which is a huge number. And what's important about that is a lot of your coastal markets, Houston being a coastal market. I love Houston. We have a lot of assets in Houston, but DFW is insulated being in the northern part of Texas. You don't have the extremes of, hurricanes and being in coastal flood areas. You don't have the extremes of weather in winter like you might have investing in the Midwest. Is just a great market. There's nothing. It's always in the top 10 of every list. Texas always has. Usually 3 of the top 10 cities to invest in, whether it be top investment city, top economic growth, top income, education, corporate headquarters, all of those lists. DFW is always in that top 10, and usually 3 cities in Texas are in that top 10. So just a fabulous market to be investing in.
This right here is another factor that we love about this market right here. As you can see, the diversity of employments. It's not just one employment. It's not just oil. It's not just manufacturing. It's actually a diverse set of employers, which means that if something happens in, say, oil, or happens in some kind of industrial section of the market, it is not going to fully impact the Dallas market. And so we love the fact that it is actually a diverse market and high-paying jobs and high-secure jobs as well.
So invest where people are going, where jobs are growing. That's what we do.
Rent and sale comps. So not to say too much about this slide right here, beside the fact that anytime we're getting ready for an acquisition and working with our sponsor teams, what we want to make sure is there is a comparison before even getting into the acquisition to see if we are able to actually perform the way we expect to be performing. That is walking through, comparing what is actually being presented in the market and how well we can actually outperform the market, and then be able to actually provide top quality to our tenants, but at a price that's less than what others are providing, thereby making sure that we are always above quality when it's time to actually be able to have our maintain occupancy rate high.
Important thing to know here is that we're in the market often. We have visited all of these comps and we're familiar with them, in both the rental comps and also the sales comps. We bid on many of the sales comps, in fact. But the important thing to note here is the blue tells you we're in the bottom of all of our rent projections. The peach color tells you what the average is, and we're below average in every category, whether it's 1, 2, or 3 bedrooms. So that's really what you want to know. Beautiful
All right,
asset,
so
even the way it sits, right, guys?
Yeah.
And we're just going to add more color and more pop to that. Everything's, is just going to be the #1 asset in that market when we add all these platinum level upgrades.
yes, and that's just even after getting it for 50K less than average for that class of asset in the market area.
Yeah, a lot of you guys that are here that haven't invested with us before, that are looking at this, that are also active investors, look at this price per door. I know you guys, I talk to a lot of you on a daily basis, and you're paying $135 a door for a C-class asset that was built in the 50s, 60s, or 70s in subprime markets. So here you have the opportunity to invest in a B-class asset in an A-class market, being DFW, and we're going to upgrade this B-class to be best in class with our platinum package, and you're buying at $135 a door. So that not much more convincing would need for me to invest, and so we're really excited to bring you guys this deal.
Acquisition timeline, as we said, hurry up, preserve your spot. And the reason for it, again, is a lot of people analysis paralysis, overthinking it, and you lose the opportunity. Go on, preserve your spot, self-commit, review it, and if you continue to like it, then we'll proceed on. If you then change your mind, let us know any questions you have, and we'll be happy to answer for you, because we believe this is a great deal, and we believe that this deal right here is going to meet or exceed your expectations.
Guys, the only date to remember is October 22nd. That's the deadline.
Yeah, and I don't even think that's important, because these spots are going to be filled up faster than that. So the most important date is today. Scan that QR code, make your soft commitment, then review the deal. If you love it the way I know you're going to, then go ahead and wire your money. But make sure you reserve your spot. Don't come to us, 3 days from now and hope there's still a spot available and it's not there. You can always give your spot up, but you can't break line. So reserve that spot in line so that you have the opportunity.
Thank you. Send us in your questions or text us and click to submit your soft commit.
Yeah, and everyone should be getting an email with information about the deal. But if you haven't seen it, or if it hit your spam box, feel free to reach out to any of us, the 3 of us, via email and or text, and ask any question that you need to ask. We will, be trying to keep a list of common questions going, so that if we have the same questions coming up over and over again, we'll be happy to answer those for you.
So you do have some Q&As here, and so when you do get a chance to look at the pitch deck, go over the Q&As. If you have any questions as well, please do ask the questions at the end of this webinar. All right. And so here's some more sensitivity analysis for people who are interested in more analytical review of it. It is also in the pitch deck. And as I said, please scan the soft commit on your phone or your tablet and quickly reserve your spot. And once you do receive this pitch deck right here, click here to reserve to schedule any question Q&As with us if you want to, but also reserve your spot and then schedule Q&A. That way you're already in line, and then we can answer your questions for you.
So you non-techies like me that are a little bit older and didn't grow up with a cell phone in their crib, turn your camera on, point it at that QR code, and a little yellow highlight will pop up, and touch that yellow highlight, and it will take you to the website where you can make your soft commitment.
Thank you for breaking that down, Jim.
Thank you. Okay. All right.